QuickBooks Online 2025, the purchase order form, sometimes called the PO form. Get ready and some coffee because we're learning to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, looking for a result that has Intuit.com and the URL Intuit being the owner of QuickBooks, therefore giving us a little bit more assurance that we're in a legitimate location. You might gotta verify that you're not a robot. Then we'll be in the sample company, Craig's Design and Landscaping. Opening up the major financial statement reports, which we'll do basically every time. The reports that are on the left-hand side in the standard tabs within the favorites. We've got the balance sheet, of course, right-clicking on it to open the link in a new tab. Right-clicking the P&L, profit and loss, otherwise known as the income statement, to open it in a new tab. We've got 3 tabs up top. Let's go to that middle tab. I'm going to close the hamburger, change the range to a 2-year time frame because I want to see 2024 and 2025 side by side. I'll do that thusly. 010124 tab 123125. Select the drop down, change it to years, and then run it to refresh it. And so there we have it. The data looks pretty much the same for 2024 and 2025 because at this point in time, all the data has been entered in 2024 and no changes to 2025. The permanent accounts still pulling over to 2025 of the balance sheet, which we'll talk more about later when we get into the reports. Let's go to the tab to the right. Close up the hamburger, same change of the range, going from 010124 tab 123125 tab, selecting the drop down years and run it. You'll notice a difference here in that we don't have the same numbers this time because the income statement is a performance statement and therefore 2024, when the data has been entered, has closed out and there's nothing in 2025. QuickBooks might change that at some point in 2025, transferring all the data from the prior year into, in essence, the current year, in which case you can run the similar kind of scenario for the next year, 2025 and 2026. The reason I kind of like to have this blank spot here is because then we can enter data and easily find it on the income statement because nothing's in here. They've got like this one transaction thus far. Also remember that everything that we've entered prior to this shouldn't be in this presentation because we've refreshed the free sample file, thereby deleting all the prior transactions, starting over from scratch. If your data doesn't refresh when you log out and log back in, you might try using the incognito mode if you want to, which in Google Chrome is in the 3 dots. Open the incognito window. Otherwise, it probably doesn't matter if you've already got the data in there from our prior presentations as well. But if you want to be in the same spot, you can refresh the screen. That's what we'll do every time. Let's go to the first tab. We're going to select the plus button. We've been looking at the vendor center, remembering we want to think about the accounting cycle, possibly on a yearly basis, and then possibly more tightly on a quarterly basis, and then a monthly basis. And then within the accounting cycles, we've got the cycles by who we deal with, in essence, customers or revenue cycle, vendors or payable cycle or expense cycle, and then the payroll cycle. We're looking first here at the vendor cycle, the expenses cycle, the payable cycle, and it's ultimately money going out for goods and services we're purchasing, remembering that for QuickBooks terminology, vendor means we are buying from somebody else. We are a vendor as well because we sell stuff, but we are on the table for QuickBooks of we're buying the stuff from the vendors. That's what vendors means for the data input. We could use a check form to buy things, which would be the easiest thing to automate with the bank feeds, or an expense form. These are basically the same kind of form, decreasing the checking account. Last time we talked about a bill form and then paying the bill form with a pay bill form, dealing with an accrual component. This time we're looking at the purchase order. Now the purchase order is kind of an unusual form in some ways because it doesn't actually record a transaction and it's only going to be used if you have inventory, and even if you have inventory, it'll still only be used in certain circumstances. To get a better idea of that, I'm going to jump over to the flowchart to get a feel for this. The flow chart I'm going to have over here. Now note, this is the QuickBooks desktop flow chart. People get mad at me for using it for an online course, but it's just a flow chart. It's the same for any kind of accounting system, is going to have the same basic flow. And this is just a nice flow chart, which happens to have basically the same names of the forms as in QuickBooks Online. So let's consider the purchase order, which is right here in the vendor flow chart. So you got the purchase order, and then we flow out here to basically finally paying the bill. So remember that a purchase order has to do with, in essence, a request for inventory. That's what a purchase order will be doing. When we have inventory, we have to ask ourselves some questions. That being, are we going to be tracking the inventory on a perpetual inventory method inside of QuickBooks, where we're not only tracking the dollar amount of inventory, but the units of inventory, which is a more complicated system to set up, more sophisticated, but pretty cool if you can get it set up, because then it'll record things automatically? Or are we using a periodic inventory system, possibly tracking the inventory in another system like Excel, or possibly online in platforms that we sell stuff on, like a Shopify store or something like that? And then when we record the inventory in our system, we're just going to record the cash transactions and then do a periodic adjustment for it. So we'll talk more about that in future presentations. But in this case, we're going to be dealing with a purchase order, which usually means we're going to be using a perpetual inventory system, meaning we have the full service kind of system within our QuickBooks account. Meaning if you're a bookkeeper, this is a point of specialization. Your question is, do I want to pick up clients that deal with inventory? If I am picking up clients that deal with inventory, what kind of inventory? Do they make the inventory? Is it a job cost kind of system? Is it custom products that they're making? In which case you're going to have raw materials, work in process, finished goods. Is it a process cost system, which you'll still have those items? Or do they just purchase things and then resell them? If they just purchase things and resell them, how are they doing that? Do they have that on a Shopify store? In which case, maybe I do the inventory outside of Shopify, or am I tracking the inventory within the system? If we're tracking the inventory within the system, then the question is, how do we order the inventory from the vendors? Now, note that if I was going to order something from an online store like Amazon, what would happen is I would order it. I'd have to pay for it as an individual when I ordered it. And that would mean it's basically kind of mine, even though I don't have it yet. They haven't shipped it to me because I already paid for it, which would mean I would record the transaction when I pay for it. If that's the kind of system you have in your business, you have to pay for the item when you order the item. Then you're going to record a transaction at the point that you pay for it with like an expense form, which is a type of check form generally, right? But if you're not paying for it at that time, possibly you're ordering like 100 teacups from China or something like that. They manufacture them. And for whatever reason, you have a little bit more control over the situation. You could say, I would like to order 1,000 teacups, and you don't pay them. Instead, they ship the teacups to your warehouse, and then you get the teacups with a bill in it, and then you pay the bill or enter the bill into the system. That's when the purchase order comes into play. It's going to be a request form that doesn't actually enter any data in terms of financial transaction into the system, but we still need to track it, because when those teacups actually come into our system, then we're going to have it in the inventory. We can imagine the bill is in the teacups. We can match what we received to what we requested in the purchase order. Then we could use that purchase order to create the bill form, increasing accounts payable, and then basically pay off the bill form. At that point, we'll be in the same spot we were in the prior presentation, where we entered the bill, then we sort the bills, and we pay the bills. It's just now that we have this added step of the purchase order requesting the inventory before we actually pay for it. All right, so that's the only time you'll have the purchase order in play. And so you want to make sure that when you're thinking about the clients you're dealing with or what type of business you're in, you can kind of say, am I going to have to deal with the purchase order or not have to deal with the purchase order? So let's enter one to see what it looks like. We'll hit the plus button up top and go over to a purchase order and enter one of these items. Let's just set up a new vendor as we go. So I'm just going to say vendor 1 again. So we'll just set up a new vendor. I'm just going to keep it there. So we're going to requesting. Now, if we're going to send this out, because it is a purchase order, it's a request form. So remember that these forms are data input forms typically used to help us generate our financial statements. This one doesn't impact the financial statements, but some of the forms also go out to customers or vendors, this being one of those forms. It would go out to, of course, the vendor as a request form. So therefore, if you had an email, that would make it easy to send out the email to the customer. So purchase order status, is it open versus closed, and so on and so forth. Obviously, at this point in time, it's going to be open because we're creating the purchase order. It hasn't been fulfilled. They haven't actually given us the items yet. Okay, so then we have the vendor information. If there was a mailing address and so on, we would have entered that when we entered the vendor, the ship to. So now we're thinking here that we're going to ship it to us. So that means it's picking up our address here, which obviously would be our warehouse or something like that if we're imagining where we're shipping over like the 1,000 teacups. But you might imagine that we're going to have it shipped directly to a customer. So, and again, that would be another kind of specialty type of business where you're saying, I'm going to make the order, requesting it from my vendor, not shipping it to me, but shipping it directly to the customer, in which case you can choose up here the customers, and then that'll change the shipping address going there. Purchase order date, we're just going to keep the date that we have the ship via if appropriate. We're not going to add any tag. We have another course or presentation on tags. Now down here, we have the purchase order with the categories and the items again with these two drop downs. Now, if you were not using a perpetual inventory system, you might just use the categories, assigning it, say, to inventory as your just general ledger account. But usually if you're using the purchase order, you have a full service system and are going to be using the items then, and we'll set up our inventory items so that when I do the purchase order, I'm requesting the teacups in our case, and that means that it's not actually going to record the teacups when I record the purchase order, but when I convert the purchase order to a bill after having received the teacups, then I'm going to record not only the increase in inventory with regards to the dollar amount, but also the units or amount of teacups, possibly using a flow assumption of some kind, like a first in, first out, or a last in, first out. And also in order to not have people steal the inventory, that's FIFO. We have a FIFO inventory, LIFO, and we also have a FAFO inventory system, which I just made up myself. It's called F around and find out, the FAFO inventory. It's one of the most effective inventory systems to reduce the theft in there. It's forbidden in California, but if you actually don't want your inventory stolen, you use the FAFO inventory. Anyway, you put some dogs out there. Anyway, that's not a real inventory system. I thought it was funny. It's FAFO. FIFO, average, weighted average, and FAFO. F around and find out. I'll get my hound dogs. Sick the hounds on them. Sick the hounds on. Okay. Anyway, so now we're going to say, let's add an inventory product here. We're going to say this is going to be inventory item number 1, let's say. And so I'm just going to set up an inventory item. We'll get more into setting up inventory items at a later time when we set up the new company file, second half of the course. But let's add one for our practice purchase order here. So we've got the inventory name. I'm just going to copy this, which is going to just be generic inventory item 1. Let's tab through this thing. Boom, 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 tab. No category. I'm going to initial quantity on hand. I'm going to say is 0 as of, I'm going to say that day, and then reorder point. Let's put at 0 again. The inventory asset account is going to be the just inventory when we purchase it. That's going to be what we're going to record the dollar amount to. Description item will be the inventory item. That's what's going to show here when I put the item in. The sales price, let's say, is $100, and it's going to go to the sales of product inventory. Sales tax, if it's applicable, which is a type of usage tax, and then the description, and then the cost. Let's say it costs $75. So we're going to buy them. Well, it's just, 75. We're going to buy them for 75 and sell them for 100. And then the cost of goods sold is the expense account that will be impacted, not here when we buy them, but when we sell them. To cost of goods sold, the vendor, let's just put vendor one, and see if it lets me record that, save it. So there it is. Okay. So now we have put this on the system. Let's say that we're going to buy, let's just say 2 of those items. So it's going to cost me $150. Notice that we're going to sell them, we said, for 100 each, but we're going to buy them for the 75, and we're tracking it basically real time. Now, I could put a customer here. You might ask, why would I put a customer when this is going to my vendor? I'm buying it. The customer would be for someone that when I'm selling to the customer. But you might say, hey, look, I'd like to put the customer here because that will remind me when I actually get the teacups that I ordered them specifically for a particular customer. So in other words, if a customer comes in and says, I want these whatever inventory item number 1, and we're like, okay, we're going to order that for you specifically, I can put on the purchase order that the customer name, not because the vendor one, the person we're sending the purchase order, cares on their end, but because when I receive the inventory, this will remind me to turn around then and create an invoice billing the customer for the items that I now have. All right, and then we have your message. So if we want to put a message to the vendor, we can add that. We can add a memo. We can add attachments if we need to. Clear, we can print it. So if you want to take a look at what it looks like, we could see the print item here and see what it looks like from the, so this is the data input form. This is what it will actually look like in the email. So there we have that. You can, when you get into the custom forms, I think we have another course or section on that. You might customize this form given the fact, just for the look and feel of it, that it is going out to particular vendors. We have the more item, which once again, copy, delete, and add audit history. We can save it. We can then hit the drop down here, save and new, and save and close, which is what we're on here, or save and send if we were sending the actual email out. I'm going to save and close it. What will it do when I save and close it? It's not going to record anything to the financial statements, but it will give me a trackable item internally that I can look at. So I'm going to say, let's save and close it. All right, so now I can go into my vendor center over here. So now I'm going to go on to the left-hand side to the expenses, which is what I would call basically my vendor center. I'm going to close up the hamburger for now. Now the first tab then once again is going to sort those items, which last time we saw that most often you think about the open bills, but now we have purchase orders. So I can select the drop down. If we have purchase orders, we might be in here quite often looking and sorting by the purchase orders. So there we have it. And then I can look at my filters where we have the status. We can look at the open purchase orders versus the closed purchase orders. Open purchase orders, let's select those. Then we could select the payee or category of the items, payee. So if I select the open ones, here are the open ones. I could select then the closed ones. Here are the closed ones. What happened here? It won't let me scroll down. That's annoying. Let me make the screen size smaller. Filter, and then I can select the closed ones. Boom. All right, so those are the closed. So obviously what will happen here, if I go back to the open ones, is we can search by the open purchase orders. There's our purchase orders. Once we receive the actual inventory, we can imagine the teacups or whatever we bought comes in. Then the second thing in our flow chart is we go to here, we enter in essence the bill, which means we're going to basically enter a bill here that we could create from the purchase order. So in other words, if we see that the teacups tie out to what we have on the purchase order, then we could make a bill from the purchase order. Before we do that though, let's take a look at the vendor side of things. And you'll recall that we have our set sorting or filtering items up top, and I can filter by purchase order. So I can filter this way and I can say, okay, there's the two ones with a purchase order. Here's vendor number 1 with the purchase order. And now we can also see our purchase order this way. I can resend it if I need to send it this way. I can copy to a bill, print, and so on and so forth. The next step would typically be, we imagine we got the teacups, they came in, we open it up, they have the bill inside it, the teacups match what we ordered on the purchase order, everything looks good. So now we're just gonna copy the purchase order over to a bill. So I'll just say copy it to a bill. I'm gonna close this out. And then, so now we have the vendor being populated. The bill date is today's date. The due date is going to be, we could enter the due date of the bill, which in this case, the terms might be useful. So when we got it, we're going to say the bill is going to be due on 10 days, net 10, which would be 1/12. And the bill number, if we have one, tags, we're not going to order. Notice that down here, we're not using the category this time, which is the major thing we used last time. Category, assign it to a specific account, a general ledger account, like utilities, telephone, or possibly to an asset account like equipment. But we're using instead the inventory item, which is populating automatically for the item that we purchased. Now, because it's an inventory item, we would suspect that the item is driving to the category or account of inventory, an asset, instead of an expense, like telephone expense. But not only that, it's also going to record the subledger for inventory, which will help us to track the inventory not only by dollar amount, but by unit, because we're using a perpetual inventory system, entering the inventory by unit as we buy it here. So there's going to be the 150, and so it's a bill. Let's go ahead and save and close that. We've seen the bill before, but we'll check it out again. Let's save it and close it. And we go boom. So now we've got the detail in here. We've got the bill and the purchase order. So if I go back into the purchase order, notice that we have this link up top telling us, hey, look, there's been a link to it. You used the purchase order to create a bill. So if I go into it, we could see there's the bill, and I can actually link over here. So that's the cool thing about a database program, is it allows you, these forms can be linked together. So when you see the flow here on the bill, also, I see that we have a link to the purchase order. I can select that link and go back to the purchase order. So that's super cool. I can close this out. And so there's the bill, and then here is the purchase order. Let's go back on over to this side on the expenses. And then note now that when I look at the purchase orders, I look at the ones that are open. That one is no longer here, right? Because it's been closed. If I go to the filters and I look for the closed purchase orders, it's now been moved to the closed items. There it is. If I go into it, you can see now the status has changed to closed automatically because I used it to create the purchase order, to create the bill. If you create a bill without doing that link, then you want to make sure that you go into the purchase order and mark it off as closed to show that it's now closed. You can also run reports by open purchase orders as well. So if you wanted to deal with like external users or something, or run reports for an auditor, you could go into your reports and have like purchase order list, open purchase order detail possibly. And so now you've got your purchase order information, and they're no longer open anymore, but you've got those reports as well. But normally internally, you'll be in the expenses area and looking within here. All right, let's check out what we recorded when we actually recorded the bill by going to the balance sheet. I'm going to run the report, and I'm going to go down into the liability side. So we had the accounts payable, It was in the 2025 area. So I'm going to go into this data, drilling back down to the source document. We entered the bill that we created from the purchase order, and we can see the full name here. The other side's going to inventory, we can see. So then if I go into this one, that'll take us, of course, into the actual bill. And there's the bill once again. Muy bien. Let's close this back out. Let's go back up top to our report. The other side's not on the income statement. Where would it go if we put inventory to the income statement? It would go to cost of goods sold. But why don't we put it there yet? Because we haven't yet sold it. It's currently on the books as an asset. Therefore, we have to deal with this accrual component, having it on the books as an asset. Remembering that, of course, the purchase order, if you have to deal with them, as well as inventory, are forms that you can't just integrate and do with the bank feeds, because there's no cash involved until we actually pay the bill, right? So, but in any case, if I go into this inventory, so there's the bill that's increasing the inventory. That's great, but this is only increasing it by dollar amount. I also want to check out the flow of inventory by units so I can track and make sure that people aren't stealing my inventory, because I have to use some kind of flow assumption, first in, first out, last in, first out, combined with that FIFO, and FAFO. I use a first in, first out, and an F around and find out inventory strategy. That second one, again, it's controversial. It's not in the book, in the textbooks, but that's how if you really want to not have people steal it, that's how you have to do it. So I'm going to go to the reports on the left-hand side, and then release the hounds. Release the hounds. I'm going to type in inventory. Let's go to the inventory valuation summary. All right, we'll close up the ham boogie up top, and let's change this. I'm just going to change it to the end of the year, 12/31/25, and then run it. All right, so there we have it. So now we've got the inventory items here, and then here's the new inventory item that we set up. These are categories. We'll talk more about how to set this up in when we set up a new company file. But here's the 2 units of inventory, and the dollar amount is at the 150. So we have a total of $746. So this amount should tie out to what's on the balance sheet for inventory, $746.25, but also give us the units. Now, just a quick reminder that when we looked at the subledger for accounts payable or accounts receivable and accounts payable, these two QuickBooks will kind of force the subledger, breaking out these items by customer and vendor respectively for accounts receivable and accounts payable, because every time we post something to these accounts, it'll force us to use a customer or vendor, and that'll force the system to have a subledger that ties out. That's not the case for inventory. If I don't use the proper inventory items, QuickBooks will allow me to post something to the inventory account without assigning an item, which sometimes you would do because you might be using a periodic inventory system rather than a perpetual inventory system, tracking inventory not within QuickBooks as per units like this, but rather tracking it outside and making a periodic adjustment. So that means if you are using the subledger within QuickBooks, you got to be careful and make sure that every time that your total here should tie out to what's on the balance sheet, because if it doesn't, something went wrong. Something got posted to inventory that didn't have an item assigned to it, and you can't track it by units, and your system will be messed up and you won't know what's going on. And if you can't see how many units of inventory that ties out to the dollar amount of inventory, you can't apply from the first in, first out method, the FIFO, then you won't be able to apply the FAFO, F around and find out strategy as effectively, because you'll be confused. You have to know what's going on before you take action, before you release the hounds. All right, anyways. That's going to be that's the general thing with the purchase order. So the purchase order vendor side, we have the request. It's the request for inventory, doesn't actually record anything, only is going to be used for businesses that have inventory. And then again, even still, you might not use the purchase order. So as a bookkeeper, you want to be thinking about what clients you're taking on and where you can specialize in.